The US stock market is opening with some serious cautious optimism. It's a total tug of war. We're balancing massive AI momentum against sticky inflation, higher yields, and Middle East tensions. Despite those risks, pre-market futures are totally green, heavily bolstered by mega-cap giants like Microsoft and Nvidia. But check out this divergence. While AI stocks surged, traditional PC chipmakers like AMD, Intel, and Qualcomm pulled back. Why? Well, that drop directly followed Nvidia announcing some crazy disruptive new AI hardware. Talk about stealing the spotlight. Meanwhile, global risks are definitely looming. The Strait of Hormuz conflict and US-Iran relations remain massive geopolitical wildcards. But if we see definitive de-escalation there, boom, we could instantly see a huge buy-the-news market rally. Domestically, the ISM Manufacturing PMI just printed at roughly 52.6. That's a super critical indicator of industrial health. Also, upcoming jobs reports and rising commodity prices, like oil, are heavily scrutinized for Fed rate trajectory hints. So while the S&P 500 is trading kinda flat, it's powerfully supported by expected double-digit corporate earnings growth. What's fueling that crazy growth? A massive wave of heavy corporate capital spending pouring directly into AI infrastructure. Because of this, major firms have massive 2026 targets. Morgan Stanley says 8,000, and Yardeni predicts up to 8,250. So here's the million-dollar question. Can double-digit AI tech earnings actually outrun looming borrowing costs and global conflicts?